Well, here we are just a few weeks into 2024, and the market uncertainty that we hoped, or at least that I hoped, to have left behind in 2023 has certainly welcomed in the new year right alongside us. From presidential campaign news stealing the headlines rather recently, Middle East mayhem, and growing global terrorism concerns, all of which stacked right on top of a pile of questions for the Federal Reserve regarding interest rates. Now, this all calls for certainty, and as an investor, that's exactly what we need more of today. So I have 7 dividend stocks to help deliver more calm and ease your way just after I break down some macros that could help you understand all this market uncertainty and keep you calm if the market shakes. Ready? Now, I wanted to just go ahead and discuss some of our most pressing macros with you because I have a funny feeling we really could see some volatility in the markets, all stemming from these market uncertainties. All not to say time the market, but rather use our macros to guide your investment decisions, scope out certain sectors, and then most importantly, just avoid panicking, which often then leads to selling on losses. Again, totally avoid that. So first, I want to go ahead and mention here that Trump just stole the show in Iowa, and I mean by a long shot. So much so that our man Vivek dropped out of the presidential race and rallied behind Trump. Now, this matters because in election years, we always tend to see more volatility as we try to understand what policies will impact various sectors. And that's all based on, of course, who will be the president. But the biggest 2024 concern for all of us is actually what's been happening following the vile terror attack in Israel on October 7th by Hamas, which has essentially led to a chess game, whereas we're seeing how strong of a hand Iran has in regards to its proxy groups, especially with the Houthis in Yemen that have been targeting any and all ships sailing in the immediate Red Sea radius of theirs. This has already caused a ton of logistical issues, rerouting for shipping companies, and all conflicts in the Middle East, as they always do, tend to toil with oil prices. However, the most important or pivotal pieces of news collectively for the stock market will in fact continue to stem from the Federal Reserve and when exactly they're going to cut rates. Now, as of this past week, we had Fed Governor Wallace allude to interest rate cuts in 2024. Not that that's new news, but some priming without any real clarity. So the question still remains, when will these rate cuts come our way? And moreover, how will businesses fare in the interim? As you can see, there's just a lot of balls in the air to juggle. And the name of the game here for us investors is really how calm can we stay and how focused can we remain? That all matters, and it all comes down to just investing into quality companies that will be more than able to survive whatever comes our way in 2024. God willing, an easy year. This leads me to our dividend stocks. Now, I want you to note that all of them either have lower growth rates with a higher yield or a lower yield with higher growth rates, all of which is just in our sweet spot as dividend investors in this market for the long term. So first up, let's discuss American States Water, ticker symbol AWR, which is a water and electricity company that's directly contracted with the US government for water system services, which just creates a very large moat around the company, meaning it will be hard to buy it at a crazy steep discount, but as it stands right now at $78 per share, that is down from the highs of around $100 per share and a PE here at 23.7. Perhaps it's time to give it a look, especially as it continues to deliver on growth to shareholders, as we can see here over 243% worth of appreciation over the last decade. And moreover, we have plenty of positive indications here when it comes to the insiders, as they've been increasing their buying activity here as well. But this type of investment is there for you to buy, hold, and collect on dividends, to which we have a yield coming in at 2.19%. That's been on a dividend streak here for the past 68 years now, while growing on average by 6% per year over the last 20 years. And speaking of safety, if you're looking for more of it, you can bet your bottom on this next one too. We have Kimberly-Clark, ticker symbol KMB, that manufactures paper-based consumer products, mainly your toilet papers, tissue papers, wipes, baby diapers, and all the alike. Boring but lucrative. So when it slides from roughly $146 per share to $123 per share, well, that PE ratio has dropped to 23.9. It's time to at least add it to your watch list depending on your portfolio needs right now. And picking Kimberly-Clark as an investment, you'll probably get that consistency here. We can see 67% worth of growth over the last decade. Analysts are projecting a share price here to climb up to $127.67. But we also have insights here when it comes to the hedge funds pouring millions of dollars into the company, buying buying over 33,000 shares last quarter collectively. And as a dividend investor, we're going to collect on a very stable 3.84% dividend yield that has been continuously paid out for over 88 years now. And get this, a 7% growth rate on average over the last 20 years. Now, there's 2 out of the 7 dividend stocks, but before I get going on these next 5, I'm calling on you to take massive action here in 2024 and join me on this financial freedom journey by simply subscribing. And while you're at it, kindly let me know that this content is exactly what you're looking for. That's all you have to do is tap on that thumbs up button to let me know, and then I'll just keep creating content just like this. With that, we're going to get back to it here with United Parcel Service, or better known by its ticker, UPS. Now, investors, we have here one of the world's largest logistics companies from sea, air, and land. UPS is there to deliver your packages. However, not so much right now in terms of returns, as it's down by almost 10% on the year, trading for $155 per share with a PE ratio coming in at 16. But keep all of those macros front and center for yourself as an investor, and that story makes sense. Now zoom out with me to see over 114% worth of appreciation and gain that confidence back as a long-term investor, as these economic conditions will surely unfold probably in our favor. I mean, after all, analysts will project here a $171.73 share price, all while hedge funds have not stopped loading up on UPS. They scored over 5.6 million shares of UPS last quarter. Now, while we wait, a very applaudable dividend yield coming in at 4.17% with 24 years worth of a dividend streak. Over the last 20 years, we see roughly 11% of growth on that dividend on average per year. Next up, another gem of a dividend stock, Pepsi, ticker symbol PEP. Need I say literally anything more about this soft drink behemoth that also racks in more than half of its revenue from salty snacks, making it a very well diversified industry leader? I think not, so let me just jump right into the share price here. It's sitting at $161 per share. That's down from the highs of almost $200 per share not too long ago. Now, Pepsi is really that type of investment that you can wait a lifetime for and then some for it to actually truly be discounted. So here I am saying, don't wait, don't let time just slip on by. We see 167+% worth of growth over the last decade with Pepsi. As for analysts, 16% worth of upside forecasted, with that share price climbing up to $193 per share. Hedge funds, of course, scoring more shares as well, over 3.7 million last quarter. So again, very well may be time just to add Pepsi to your watch list. Enjoy the dividends here with Pepsi, a 3.05% dividend yield. That's been on the dividend run for over 58 years now, with a growing dividend yield as well, roughly 11% year over year. Now, this next one, not quite sure that I've mentioned it all too much on the channel, but definitely a big player in the dividend game. We have Becton Dickinson, ticker symbol BDX, which is a medical technology company that focuses on manufacturing medical devices along with medical instrument systems. That's on top of consulting and analytics services. So I personally feel it's really an under the radar type of investment here when it comes to dividend investments, yet plenty of history proving itself since 1897. As it stands right now, we have a share price that's at $235 per share. It's faltered from the peak here back in August of $282 per share. Let's zoom out here. We get 150% worth of share price appreciation, with plenty of analysts that are bullish on the stock. Forecasted share price coming in at $277.13 per share. It's about 17% worth of upside potential. Now, depending on our economic environment moving forward, I'm going to be honest, may take a minute or two to recover, but in the meantime, we do have a beautiful dividend yield to collect on here, a tad lower at 1.62%. That's been steadily growing though over the last 51 years worth of that streak, and that's been growing by about 12% on average here over the last 20 years. But now, if you're looking for an investment that may be a bit more well-known, if you will, by at least the brands that it has under its belt, we can check into Hormel Foods, ticker symbol HRL. With over 40 brands in over 80 countries total, I'm sure your pantry, fridge, or perhaps your bedside table may have some of these brand names like Corn Nuts or Planters, Skippy Peanut Butter, or Valley Fresh. We have Hormel Foods providing plenty of investors with security, and now we have a great share price on our hands as well, $31 per share at a PE ratio here at 22. But for a second, I want you to think about your last grocery bill. Just imagine buying one share of Hormel Foods every single time you you went out and loaded up that shopping cart, you would sincerely be well on your way to ensuring that Hormel Foods is paying you to shop. All while that share price would appreciate as well. Looking back, we see over 67% worth of appreciation. Time will take time, but the benefit here as a dividend investor is in fact that time you'd be waiting and collecting on Hormel's 3.61% dividend yield that has been on a dividend streak here for almost 60 years, while growing by 12% on average per year over the last 20 years. However, if none of those stocks did it for you, I'm going to present you now with one stock that I am actually very excited about for its dividend growth and just sheer ability to continue to scale. Let's talk about Starbucks, ticker symbol SBUX. Now, we all know that Starbucks is the world's most dominant coffee house chain, both domestically in the US and moreover abroad. Just on a global scale, it is a powerhouse. I mean, these mocha, choca, latte, or frappes, whatever you want to call them, can literally be found anywhere and everywhere. And most recently, a major announcement that the Starbucks team will begin operations in India with 1,000 locations by 2028, which is really exciting. And whether you feel Starbucks actually has real coffee or it is literally just giving you a cup of sugar with foam, I say this: their drink is really a luxury, distilling a certain image of class, if you will, to which in tighter economies, we do see shifts in consumer behavior with Starbucks, but almost all of the time here, people will just continue to drink the coffee because they love it. So we have a share price at $92 per share as of this recording. That's down from about $107 back in November. And as it usually bounces and fluctuates in between those windows, it should just be on your watch list. After all, the company is just still growing. It's experienced over 200% worth of appreciation over the last decade. Analysts just remain very bullish on Starbucks as that share price is projected to hit $109.93 per share. It's about 18.5% worth of upside. Hedge funds have certainly been pouring millions back into Starbucks, but just sitting on Starbucks for the longer term, it's the dividend that may be well worth it, coming in very sweet here at a 2.46% dividend yield. That's only been on a dividend streak for about 13 years now, but check this out: a 17% growth rate on average year over year over the last 20 years. Now, you tell me which of these stocks are buys. Do you have better stocks in mind? Comment all your thoughts down below, and of course, discover more insights right here. But before you click away, subscribe so you are actually in fact notified when my next video goes out, and I will see you all there.